Signature Global is another one. Very good set of numbers actually. The operational update came in Q1. The pre-sales have surged 250%. Collections are up over 100% year on year. Their net debt has also declined to about 980 crores versus 1160 crores. So all in all, very good set of numbers. Rajat Kathuria, who's the CEO at Signature Global, joins us now to discuss more on their Q1 performance. Rajat, thanks a lot for joining in. Can you tell us, will you be able to surpass your FY25 guidance given the kind of strength you've seen in the Q1 performance? I think you had spoken about a 30% growth in your numbers in FY25, but do you think you can do better than that?
So, Sonia, we had a fairly good quarter. We launched our first project in Sector 71, which is a very key, micro market for us. The launch went off very well. We achieved about 2,700 odd crores from a single project, and that contributed significantly to our Q1, pre-sales numbers, where we've crossed about 3,000 crores. This gives us a lot of confidence to, achieve our annual guidance of about 10,000 crores. It would be a little premature to say whether, we are crossing it or not, but we are confident to achieve that guidance.
Okay, all right. Hi, Rajat. You have mentioned that you expect realizations to normalize from these levels. What's the normal level? And if you could break up, your sales mix between affordable as well as mid and premium.
So, Prashant, thanks for inviting us to your show. So, for this year, we will be doing mid-income and premium segments, middle income and, upper middle segment, or, whichever way you want to, put that terminology. That should be about equally split. Our launches for the year are for about 16,000 crores. Our sales guidance is 10,000. I expect the sales to be equally split between products selling at about, 11,500 to 12,000 rupees a foot, going up to about 15,000 to 16,000. So the average realization should be somewhere between 13,500 rupees a foot. And
you want we are the split between various verticals, the current sales mix.
It should be equally split. By and large, equally split. We are coming up with a big launch in the Sona market. This is almost about 130 acres of project which is being launched, which would be more of mid-income product, and we are fairly confident on achieving good sales numbers out of that project as well.
Rajesh, we had the management of DLF recently as well, and they also told us that they're also expecting more sort of moderate trends as far as pricing is concerned overall. I was also trying to ask them whether they are seeing a lot more sort of speculator and broker demand as opposed to end user demand. So I wanted to ask you that as well, especially that market that you're in. Because that's what we hear from builders here in Mumbai, etc. Gurgaon dekhiye, Gurgaon mein kya ho raha hai? So I just thought I'll ask you what you're seeing.
So, you need to understand the micro market a little bit into depth. I don't think it's a fair comparison to compare Gurgaon with Mumbai, because
no, I'm not comparing, but
market. I'll answer your point. Gurgaon is a fairly new city, so to say. It's a 20-year-old sort of, city, 25 years old. Literally, if you go along that back, there's nothing much in Gurgaon. But, over this last 2 decades, the city has grown phenomenally. And a lot of demand has come from people who are coming from Delhi to Gurgaon for, their everyday work. A lot of office space today is in Gurgaon. A lot of healthcare facilities.
I'm very Rajesh. I used to be based in Delhi. I'm very familiar with Gurgaon. Although it does, every time I go there now, every 2 years, it looks like a different place because so much development is happening there. So you don't think there is any of that, which is slightly frothier kind of price action, or some element of that?
Pricing is not frothy in my view. I think it's by and large driven by end users. They will be investors or people who've created wealth with Gurgaon real estate over a span of time. So, you've talked about DLF. People who would have invested in DLF like 15, 20 years ago have created a lot of wealth at, an individual level. And to that an extent, yes, there will be people who could be long-term holders of, real estate. We are cautious of, this risk. And usually when we are allotting, units to our customers, we try to make sure that, we are not allocating more than one unit to someone at a single, residential address or on a single, unique identification number. So we take those sort of precautions, but I feel by and large, this is an end user driven market. And the only reason why you're seeing the market doing so well is because over the last decade, there's very little supply which got added in terms of new housing.
Yeah, got it.
So there's
good to get that assurance, Rajesh. And to be sure, DLF also told us the same thing. They said that one of the indicators they use is how much of what they sold, say over the last 3 years, how much turnover has there been? And they said, well, there's been very little turnover. So which kind of shows you some of what you're saying as well. Okay,
yeah,
great to hear that. Thank you very much, Rajesh. Appreciate you coming on and sort of giving us that perspective. Thank you for joining us.